All right. Well, thank you very much, Janet. Good morning. Let's bring in Brian Hoops. He's our next guest analyst this morning. Brian, thanks for being on the show on a Monday morning, getting things kicked off. Now, I've seen a lot of red on the screen here this morning. Why don't you walk through and tell everybody why you think that might be the case?
Yeah, good morning, Scott. We are seeing some follow-through selling from Friday. We saw a real poor technical close in wheat and in corn on Friday. And that is giving way to some selling again this morning. Crude oil's down. That's also weakening of these markets in here. But one of the more significant things is the first cargo of corn has left the port of Odessa. And this is Ukrainian corn destined for a couple other countries. So it's significant from the standpoint this product is starting to move. The market is anticipating we'll see more product moving in the days and weeks to come. And then from a weather standpoint here in the U.S., some of the weather models on Friday were talking about really extremely hot temperatures, dry conditions for the Western Belt. When we talked Friday morning, it seemed like that was about as dry as the forecast could get. And since that time, it's turned a little bit wetter. Some of the models have turned wetter for the Western Belt as well as the Eastern Belt. While keeping some heat in, it's not going to be as hot as what was predicted on Friday. And so, it's a very volatile market. We had a $2 rally in soybeans in about 5 days. And so we're giving some of that back. And the markets seem to overdo it to the upside, to the downside. They probably had done it to the upside last week, maybe overdid it to the downside here in the overnight as things really got rolling. And hopefully we can find some stability early this morning and see that market maybe put in back some premium.
Yeah, we also had a little bit of a negative news coming out of China. Worried about a slowdown there. We also have to worry about our own slowdown here, what that might do to some of these prices as well. So why don't we take a quick look at some of these prices while we're talking about them. Let's talk about corn. Let's see what corn was doing overnight. Down about 14.5 cents in September to 601 3/4, while diesel was off 15 3/4 cents to 604 1/4. Moving right along to see what the soybeans did overnight. 28 3/4 cents lower here in that August contract. 1608 1/4 is last. September down 30 1/4 to 1457. How about what's we have happening into? Let's go over to wheat in Chicago. The wheat in Chicago is going to be, when the technology allows it, down 19 1/4 cents in SEP to 788 1/2. We've got hard red wheat in Kansas City. That's also overnight was off by about 18 cents. All off about the same as I was doing the radio show here this morning. SEP off 18 cents to 856 1/2. Moving over to the spring wheat in Kansas City, 16.5 cents lower, and that's SEP contract, 889 1/2. Dees off 14 3/4 cents to 903 3/4. And now let's see what was going on in cotton. Cotton was an interesting one too. It was also lower by about a couple hundred points, and it's lower actually in that Dees contract now by 304 points lower to 93.70. Real quick, Brian, it still is going to be a rough open here. What do you think could turn it around real quick?
Yeah, you're right. We're going to find some selling pressure right on the opening once again as the overnight markets were lower and no export sales. But the dollar is a little weaker this morning. That's a positive for us. As we start to trade here this morning, if we can hold these overnight lows, short covering should develop. And of course, we'll have weather models coming out around the midday time frame. If they would go back to a little drier pattern, maybe a little hotter again, that is enough to give us a rally in the market. So we're watching these forecasts every 3-4 hours as a new model comes out. We're going to react to whatever that says.
I think we also want to make sure we keep an eye on that crude oil market. You mentioned that. I think that's really key. Crude oil, you've got about an 80% correlation with corn and about a 60% correlation with beans. So if crude oil is taking a tonking here early, that's also going to be kind of negative for those products. All right, we're going to go away, take a quick break here, Brian. Don't move. We're going to pay some bills. We're going to come back and talk more with Brian Hoops about livestock after these messages.